the wires. When I close my eyes, disconnected and tired. I see just fired. It's just fire.
I know it's silent on your end, but I got music going on for the stream, so the production value is good.
Cool.
All right, we're looking good on everything. Hello, everybody. It is October 4th of 2024. I am here with Astronaut Toad. We're going to be doing an exclusive, awesome lesson today. Astro, why don't you go ahead and take it away, my dude?
Hey, everybody. Good evening and welcome to the live stream. I don't know if you are watching through the Discord or you are watching a public live stream, but we are recording this live stream and it will be available to the Discord members later once we upload it to our private host. Then also on top of that, I just wanted to mention that this recording today is going to be highly valuable because what we're actually going to do is make Q&A with the members on the Discord and then integrate all of that information into a final product that the public can purchase. However, the original recording, this recording right now, will remain available to our Discord members. So that's if you're listening, if you're watching right now anywhere else outside of our Discord, then if you hear this, then if you want this live recording, you will always be able to access it later in the Discord community. So yeah, with that said, let's jump right in, shall we, Mickey?
Yeah. Everybody, please invite your friends to the server. If like there's a lot of public stuff that we do these live streams, so if they want to check out the content that we have and what we do, they're more than welcome to watch those for free. But if they want to get in here, you can send them to www.cartoonmoneyprinters.com. You can click the Start Now button, and then they get 90 days free access to try the server on for size and see if they like it. It comes with 5 indicators. Membership comes with 5 indicators, plus access to our experienced analysts here. You can ask questions. We have many different alert bots that operate that give you signals and ideas on which coins to look at and what what times to start looking for a buy. So lots of other stuff in the works as well. So just please be sure to let everybody know.
Yep. All right. Yeah, I love the usual regular weeks where all we do is just technical analysis for a whole hour. That is so much fun. I mean, that's why I do this. But also, the other reason why I do this is because I want to help people not lose money and start making money eventually. But of course, we're not allowed to promise that for whatever financial advice reasons. But yeah, that's where I start. Is step one to making money is not how to make money. Step one is stop losing money, because everybody finds it very easy these days to just throw some money on an exchange and trade it, and it's gone in a few days, and they just repeat that process forever. So tonight what we're going to talk about is trading psychology. There are tons and tons of videos and books and audiobooks out there about trading psychology, and I have distilled down everything I have learned about trading psychology into this brief but thorough presentation. So let's jump right into that. Basically, I wanted to approach psychology from the standpoint of an example of what to do when the market is crazy or scary. Maybe this is a Halloween themed, it's October, so the scary, terrifying market, that is probably when your emotions are the highest. So let's say you open the chart, what do you feel? You are going to feel one of three things. You are either going to feel your initial reaction right when you look at the chart. You're either going to feel, oh my God, what is going on? I cannot believe this. Or you're going to just look at the chart and think to yourself, what the heck? That's disgusting. It doesn't make any sense. It's not exciting. It's just boring. Like, I can't tell anything. The third thing, when you look at the chart, your initial gut reaction could be, this looks familiar. I think I know what might happen next. And you can guess which one of those three things allows you to trade, and the two others you do not trade, right? So let's dive into this. There are a handful of toxic stages of emotion when you are trading a market, especially when it is scary. And the first thing is just shock and disbelief. Like, if you look at a crazy dump, like we're looking at Bitcoin live right here, right now. I prefer not to cherry pick old charts. So let's just look at what's going on right now in the market. When you see price action do something crazy and your initial reaction is shock, you're going to think, oh my gosh, I can't believe this is happening. This is crazy. What that results in, or the next thing you're going to think, if that's your initial reaction, is you're suspicious of why it's doing that. You're thinking to yourself, there's no way it can keep going like this. It's got to reverse soon. Like this pump or dump or crash is crazy. I'm going to fade this move. Or the opposite. Maybe you're thinking, your emotional reaction is, oh my gosh, this is it. We're going to the moon. I'm going to jump on this bandwagon and I'm going to be rich really quick because it's going to keep going. Either way, that's an emotional reaction to what is originally shock and disbelief, meaning you were caught off guard by the price action that is happening. Okay? So the third thing that happens is you become a know-it-all and you're like, everybody else is an idiot. I know better than everybody else. I'm going to jump in, FOMO into this long, and it's just going to keep going up. Or you think to yourself, everybody else is an idiot. It's going to reverse. I'm going to catch the knife and it's going to just fall like a rock or pump crazy. And I'm catching the perfect reversal. And everybody else is an idiot. And of course, you know where that leads to when you try that, though. First, especially the first entry, the next stage is confusion. You're like, well, why did price not go in my favor? I went long right at the top as it broke out, and of course it reversed hard immediately. Like you're going in here at the top of one of these tops here, and you think, look at this breakout right here. You've got this upward price action here. You think this is an ascending triangle. It's breaking this high here. If you went long right here, I guarantee you a lot of people went long. Actually, you can see this volume spike down here. A lot of people went long right there when it broke that high. And look at that, just bam, it slammed back down right away. That right there is people thinking they're a know-it-all. And then they're confused, saying, well, why did I just get stopped out? this is gonna go. And then they move their stop loss. Say you're fiddling around here, and you're like, oh, you know what? I'll just move my stop loss. So you got long right here, or no, in this candle right here is the big green candle. You got long right there, and you put your stop loss right here, and you're like, or you put your stop loss right here because you thought, oh man, this is great. I'm gonna go. It's gonna go. You're doing some projection and thinking it's gonna go way up there. But then it just kind of reverses hard and it goes up and you're like, oh, okay, yeah, I'm right. And you think you know what's going on, but really this is just dragging into confusion. It did not do what you thought it would do. And so you're like, okay, well, let me just give it a little bit more room to breathe, But then, of course, it comes back up and you're like, oh, yeah, see, of course, I knew what it was going to do. And then, bam, you get stopped out. So the next step is you're frustrated. You go from confused to just frustrated. And that's even worse because you're like, this shouldn't have happened. I know I'm right. It's going to go in my favor. And especially, look at this right here. See how it dips? It just smacked everybody's stop losses. But then it goes flying right back up right there. I guarantee you, there's a bunch of idiots. They went long right here again, and they put their stop loss right below that low because that looks great. And they're like, oh yeah, see, I knew I was right. And so now you're on your second or third getting stopped out because, maybe right now you're just barely starting to get some sense of self-discipline. And so you're like, okay, I'm not moving my stop loss. This, bam, but then you get stopped out right away. And then it comes back up above your entry and you're like, okay, here we go. I can't believe this example is playing out so perfectly. I just randomly pulled up we're looking at a live chart right now.
That is awesome.
But look at this. This is psychology. This is what people are thinking. And you know what? We're live right now. It might go to the moon right here. I don't think so. We'll probably find out by the end of this recording. Anybody want to take bets?
I
don't even know if we'll take out this high.
I would say it goes
Maybe
short.
we will.
I mean, it didn't hit my POI going down, and it's weekend volume. Being on a Friday
it's
night.
weekend volume, yeah. So here we are. We're on our third, maybe fourth entry. The problem is not, this might go to profit. That's not the problem. The problem is that our mindset was shock and disbelief. And then we're a know-it-all. We thought we knew better than the market maker. And now we're down to our second or third stop loss. This is a 2.6 risk to reward ratio. So even if this trade wins, you're still not even making money, or you're barely breaking even, or you're making you're making pennies, you're making peanuts. So at this point, you say this gets stopped out again. That's when you are not just angry, but you're just done. You hate the market. You are angry. You hate that market maker that took all of your money, and you think to yourself, all right, I'm out. Look at this right here. Let's say you put your stop loss right at this low. I'll bump it down just one little bit. Bam! You put your stop loss just below that low. Now you are out a third or fourth time. This is where you're going to be like, oh my gosh, I hate this. I'm terrible. I don't know what I was thinking. I'm a terrible trader. I'm done. I'm walking away. You're finally gaining a sense of self-control. And it's too late because you spent all your money for the day or whatever. We'll get into that next. But you spent all your money. You have to walk away. You get to sit there and watch this go to profit, maybe. Or it just stops you. It keeps going down. And you're like, well, I'm just completely lost. I don't know what's going on. And you might even quit trading altogether. I don't know which is worse. If this goes down and just tanks, you quit trading altogether. You stop losing money. Or if this goes to profit, you're gonna try again tomorrow, and you might be losing like this for another year or a few more months or whatever. Here it comes. Here's dumping now. No volume yet though, so the volume spikes kind of give me a reversal signal. You can see how there's a tiny spike of, let's hide this here. This is our par indicator that I love. It's free inside the Discord. But look at how these spikes kind of symbolize, it's above this moving average, the 55 volume moving average. Yeah, that spike signals that top, and this spike signals that bottom, and this spike signals a bottom-ish right there, and these spikes signal a top. So that's what I'm looking for. This is going to go down until you see a volume spike, probably. Anyways, that is all wrong. Whether or not this hits profit right now, you have gone about the emotional side of it all wrong. How do you do it correctly? So let's see. Is there any questions or comments in the Discord? Let's see if we got any.
I didn't see any.
One new comment. No, that's just somebody else. Anybody, leave a comment now if you have anything to say or questions about this, like what if or anything to add. But the question now is, how do you correctly, what is a healthy way of trading with emotion? Because, you know, gurus out there will tell you, you got to trade like a robot, be emotionless. And I kind of disagree with that, because I believe that the best strategies have an element of intuition and wisdom. Otherwise, a bot will do your job better, you know? So there is an element of emotion. And how do you do that correctly? Well, let's scroll back and let's talk about the emotional side of things. You see this pump. Let's say you thought this was going to break right here. And you were like, okay, it's going to just tank. This is absolutely what's going to happen right there. That is it. It's game over. And then you see it pump like this, okay? When you see price action going up like this instead of tanking, the correct response is, that's interesting. That's impressive. I was not expecting that. But the fact that I was not expecting this to happen inherently means I should not just go long right here. In fact, I mean, we could talk about that later. There's a perfect ICT setup right here. Look at that. You've got a break. You've got two lows right there going. I'm not doing my thing because I'm holding my phone to look at my notes, but let's look at that.
Hey, notes aren't allowed.
You know, that right there, there's your entry long right there. But let's say you were emotionally convinced that this was going to tank. You made no plans for it to go up. How do you react to that emotionally? You say, the fact that I was surprised and caught off guard by this means I should not trade in either direction. I should not go short. I was expecting a short right here. I should not just blindly go long here just because it did the opposite thing that I expected. I need to wait and have clarity. So what do? The next step is, number 2, look and say, what are the next nearest levels where if price gets there, I could look for a trade? And that's when you go, okay, if this is headed up, it's going to maybe target this high, right? So then you say, okay, I'm going to either trade to that high. If you saw this market maker model right here, it's not perfect because this is a lower low, but maybe you got in long right here by saying, aha, this high might be a target now. Or if you didn't recognize this, maybe you're not an ICT trader or whatever, what do? You say, okay, I'm going to wait till price gets up here and then look for signs that something familiar. I was surprised, I was caught off guard. What do I need? I need familiarity. Okay, so price gets up here and that's the next step. You say, price is finally at a level where I can begin to form a theory. And then if the right signals continue to show up, I could take a trade. I might go long, I might go short, but all I'm looking for is a pattern that is familiar. I need to see something that I recognize. And so you might look at this and say, okay, it broke this high and then got back down hard. Well, that's a sign that this is a rejection. So I'm going to hide all of this so that we can
and I just
maybe
want
come
to
back
let
to it
everybody
later.
know that the lagginess in his mouse and stuff is based off his resolution. So the stream and everything's coming in nice. But on my end, on the viewer's
You
end,
know, if you see price get there to that level and you're like, oh, I'm going to wait and see what happens at this level. And then you see price get slapped hard. You say, okay, clearly there might be a market maker up here at this level. So what am I going to do? I'm going to watch and see what continues to happen at this level. And I wonder if there's a divergence here. That would be hilarious. Let's see, where's my again, folks, I'm just doing this all randomly on live charts. We're just scrolling back, and we're on the 1 minute chart. So good Lord, I don't even like trading the 1 minute chart. All right. So what do we see? We see a hard slap. What that could mean is there's a market maker up here and he wants to short and he's got a lot of money. And so he is just going bam. Or the guy got in, the market maker got in long here and he is taking profits heavily here. Either way, you have to see this and go, yeah, might be a reversal. Then when it gets above this high here, and it just does not do it, you see a divergence. Here's a divergence, a bearish divergence on our par indicator. This is only on the 1 minute time frame though. So again, not a trade I would take, but a great example on a live chart. That is a 1 minute bearish divergence. Bam. You could, if you were degenerate enough to trade the 1 minute chart, you would be going short here. And that would be, let's say you wait until that thing just starts slamming down. Your stop loss would be at this high. You get a 1 to 2? Yes, you do. Look at that. So not only would you be able to take some profits at 1 to 1 and cover this stop loss, you would actually hit a 1 to 2 profit target if you wanted to. Okay. So that's what patience and a solid emotional response gets you. You would get stopped out because it comes back up here. You would at least cover this trade or turn a profit. And that's what it is. You saw familiarity. You say, okay, I recognize this. Now this happens and there's a divergence. Now I've got not just one thing, but I've got 2 or maybe 3 things show up and say, yep, I've seen this before. I know from historical past experience that if I see this, I should trade back down in this direction. That is the process. Sometimes you're wrong. Sometimes it does something completely unexpected and you say, okay, I'm just waiting. I'm not trading. I'm not doing anything because it caught me off guard again or whatever. Okay? That is the correct way to react when price is doing something you don't expect. You wait for a key level to get hit, and then you wait for something familiar to happen at that key level. And then you may still not do anything if you don't see what you like, or if you don't like what you see. Actually, both of those things are true. If you don't see what you like and don't like what you see, then no trade. So, moving on. Are there any questions? Throw them in the Discord chat. I was going to go, let's see. Yeah, let's skip to the mottos to live by in terms of emotional trading. Basically, the takeaway from all of this is that hope is not a strategy rule. Hope is an emotion. And so if you say, I hope this is going to happen, you can't get emotionally attached to it. So that's the next point. Hope the point is, if you see something unexpected, and then you start to see, you wait patiently for price to get here, and you say, okay, I'm actually right here. I would be bullish and expect, oh my gosh, I think it might go higher. I expect it to go higher. Maybe you're inexperienced and you haven't seen that many liquidity grabs. Your emotions are going to tell you, no, 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 don't do that, don't do that. Emotions are not a valid strategy rule. If you feel good or feel bad about a trade, that is a highly subjective thing. And let's see. Can everybody hear me? Okay, cool.
I just don't think you can hear me. Can you hear me?
Well, I hear you now.
Okay.
Cool.
I don't. It must be when I press the mute button. I'm just gonna
Yeah,
not
okay.
be muted.
All right. Cool. So yeah, that's the bottom line with emotion. Emotion is not a strategy rule. You cannot use emotion to say, this gives me confirmation that I should take a trade. Because you feel good about it, or you feel whatever. So if a trade fits all your rules, but you don't want to take it because your emotions are fearful, you still have to take the trade because it fits all your rules. And if the trade loses, then you can reassess your rules and maybe change your strategy a little bit later. But right now, in the moment, you need to take the trade if it follows your rules. There is a subtle, like I said, there's a subtle amount of wisdom involved in emotional intuition on when not to take a trade. But that's generally more for overall market conditions. Your emotional bias could happen at the beginning of, when you first look at the chart, like I said. When you first look at the chart and you go, oh my gosh, what the heck is happening? Then just don't trade that whole day. Take the day off.
Yeah. One thing.
Or if you see something familiar, then you're like, okay, now I can actually put in the work.
One thing I want to point out too is people can get lost in internet biases as well, and you can pick up emotion from like Twitter, let's just say. So it's good.
Yeah,
it's good to check yourself from internet TA versus your own TA.
Oh yeah, I had to stop watching other YouTubers who were. And this was part of my learning process. So if you're in the middle of this, I don't fault you for it, and you may learn something. But here's what I learned. I used to follow at least one perma bull and one perma bear. And I would listen to them. I would try to listen to them equally and say, okay, this guy's just always bearish and this guy's always bullish. And if I listen to both of them, I can make my own decisions, blah, blah, blah. You know, what happens is one of them logically makes sense one time, or they are proven right one time. And so then I start to trust that person more because that perma bear was right once. And I'm like, okay, I'm going to listen to them. I'm emotionally attached to their input because they were correct once. But in reality, you know what they are. They're a broken clock. They're right once or twice a day, and that's it. So emotional bias is definitely very strong in that regard. If you have emotional bias based off of what other people are saying, just remember that the vast majority of traders lose. So the next thing I wanted to say is, this is another motto. Never get emotionally attached to any one particular trade. Let yourself get stopped out and move on to the next trade. If you're constantly moving your stop loss, you are going to be unprofitable. If you're constantly moving your stop loss, you need to just revisit your whole strategy. Because always moving your stop loss is not a valid strategy. What you do is you set your levels and say, okay, I'm going to wait until this level gets hit. Then I'm going to see what happens at that level. If I don't like what happens at that level, I don't trade and I wait for a different level to get hit. I don't know. That's the problem. I don't know if it's going to keep going up or if it's going to drop like a rock. But all I need to do, if I don't like what I see at this level, is wait for the next level. It's going to get there eventually. But if you're just not seeing things clearly, don't take the long or the short to the next level if you can't see something you're familiar with. Okay? The next emotional motto is don't add to a trade or move your stop loss unless it is part of your plan before you enter the trade. Say, for example, in this trade right here, you might think to yourself, well, what if there's one more stop loss run? Instead of trading like this, you might say, all right, I'm going to put my stop loss double up here. You can use ATRs for anything. Then I'm going to put another trade right there at that high because the high might get taken out. And here you are. This is a calculated decision. You're going to use that and say, bam, look at you got here, a 3.6. Targeting that, oh, let's get down here to this other level. Where was the 2.0 level? A 4 risk reward trade. And that is a knife catch. But you can't do this unless you are planning in advance. If you're taking one risk here and you're adding another one here, that is 2 risk factors for the day. And if this whole trade goes south and you get stopped out, you might be completely done for the day. Maybe if you're thinking, this might happen, only put on half of a risk factor right here and put the other one here. That'll make a huge difference. If you're only risking 1% of your account instead of 2, and then you risk the other 1% here, you're getting a 1 to 4 risk reward out of this bad boy. I guess you probably can't bump leverage up, but you could bump your position size up to get and keep the stop loss the same level. And you're making much more money with that trade. So, all right. The point is, adding to your trade should not be like, oh, maybe I should move my stop loss. You can't do that. You can't do that in the moment. It needs to be part of your plan and say, okay, I am going to add to the trade if it gets here. All right. Okay. Last but not least, that's the main thing, is clarity and familiarity are the foundation of almost every good trading strategy. If you are surprised or scared by what you see on the chart, you do not trade. You need to have clarity and you need to see something familiar. That is what gives you an edge on the market. So we'll talk about edge and all of that stuff in a future video.
Just one example of an edge might be something like the par indicator.
Yeah, in our Discord, we have a handful of different strategies that we trade. And they're all based on very solid, fundamental things that we have found that they just work when you follow the rules. And that means you have an edge because you know that if the conditions are right and you take every trade when the conditions are right, then on average, you will come out ahead. That's the very definition of an edge. So we'll talk about that in great detail in other videos, I'm sure. But I want to finish talking about emotion. And that is, the final discussion is all about how do you take it to the big league? Say right here, right now, I'm trading the 1 minute chart. I'm not going to risk more than a few dollars on a 1 minute chart trade. Are you crazy? Like, I'm not a big baller. I'm not going to risk $1,000 in this tiny little move right here, okay? So how do you go from risking $1 or $10 or even $100 How do you go from that to risking $1,000 on a single trade, or even risking $2,000 on a single trade? You see that a lot on YouTube, where these guys have $1,000, $2,000 stop losses, and they're like, I made a $10,000 win or a $5,000 win. Like, well, yeah, they risked $2,000 or $3,000 to get that win. How do you get there? Well, for most people, that path involves a prop firm, which, if you don't know, that's where you pay a few dollars to access a lot of money. But either way, whether you're trading with your own money or you're trading with a prop firm, the emotional lessons that we're going to go over now are sort of the same. However, keep in mind that I'm going to be talking from the standpoint of a prop firm, so that is a path most people are going to be taking. All right. Either way, whatever you're doing, when you're trading with tons of money, you have to treat it like a job. That means any money that leaves your wallet, that's a business expense. Whether you're paying an evaluation fee or an activation fee on a funded account, or you are depositing money with a broker to actually trade, either way, that is a business expense, and you should treat it like you're just there to do a job. That also means, hey, you know what? You know what people do at work? They look for excuses to slack off, or they look for excuses to not show up at work. So that goes back to my original thing about the initial reaction of psychology. If you have thousands of dollars on the line, you open that chart and you look at it and you go with your gut and be like, I think I see something familiar, or yeah, this looks like I could trade it. Then you trade that day. Or if you open the chart and you're like, what the heck is this? This is nasty. Close your computer and walk away for the day. Take the day off. A trader, a full-time trader who's making potentially thousands of dollars per trade, unless you already have a millionaire lifestyle to support, any trader should be able to take many days off per month and just be like, nope, not trading today. Okay. And like I said, unless your cost of living is already very high, you should be able to say, no, you know what? I don't trade on Fridays, or I don't trade on days after a gigantic move, because it's just going to be nasty chop. Or you don't have a hard rule like that. You just have a soft rule of, if I look at the charts and I'm not feeling it, and I watch price action and it just goes, I did not expect that. I did not expect that. Oh my gosh, what the heck is happening? You walk away from the charts for that day, okay? Look for an excuse to take the day off work, all right? Well, the next point is related specifically to prop firms, and that is the money you have is fake. Literally, it's actually fake because you're trading on simulation on most prop firms. You are not actually trading the NASDAQ or gold or S&P 500 or oil or whatever it is. You're actually trading a simulation, so none of it is real. The prop firm is just taking your money, activation fees or the evaluation fees or whatever it is. They're just taking your money, knowing that 90 or 95% of you will fail, and they will just keep your money. And then a few of that 5% or less of people who succeed, they take all of the money they're making and they pay you your payout, even though you didn't actually trade that market. Let's see what's going on live right now.
Can you explain that a little bit better? Like I'm getting the sense that you're saying that the trading platform, because they have their own interface, their own portal, if you will, on their like quote unquote exchange. That's the simulation that they're using just to take your money, and then they actually are making money from the traders that are profitable, and they're just paying you out through a simulated chart.
Yeah.
Is that what you're saying?
Let's say for example, 100 people pay $100 to do a prop firm thing. Let's say 95% of those people, so 95 times $100 what are we at? $95,000 or $9,500?
I think 95,000.
$95,000 in their pocket because 95 of those 100 traders failed. $95,000 in their pocket. Let's say those 5 traders, they probably only make 10,000 total. Maybe total between all 5 traders. Let's just say they make, I don't know, $50,000, $60,000, $70,000 in profits. Well, the prop firm, without ever actually placing a trade, pockets the difference and pays out that $50,000 that they owe to those traders, and they pocket the difference from all those other traders that failed. Okay? Now, there is one exception, and that is some prop firms, I think Top Step has this, where if you are consistently profitable for week after week after week and month after month, they will invite you to trade a live account to say, hey, we actually trust you so much that we are going to actually put your trades on the actual market because you are such a good trader and you trade big enough size, usually, that they want a piece of the pie. It makes them money if you are actually, or they don't lose any money by placing your trades in real life. If you are consistently profitable in the long run, then they don't have to pay you all that money. You're paying yourself. You're making your own money through the prop firm, so they win. Because now they don't have to pay you $50,000 because you're actually placing the trades. That's how that works. Okay. But that's more of a psychology thing of, it's not actually real money most of the time. The real important point is not that, though. The important thing that you have to remember, especially when you're trading with a prop firm, is that you do not actually have even that much money. Let's say you pay for a $100,000 prop account, but you read the fine print of that account, and you don't have $100,000 to play with. You have $2,000 or $3,000 of drawdown. That means you do not have $100,000. You have $2,000 or $3,000 worth of margin to play with. If you know what margin is, if you don't know what margin is, Google it. But basically, what that means is you could place trades to the tune of $100,000. But as soon as you lose $2,000, you're out. They cancel your account and you have no money. Whatever $100, $200, $300 you have paid for that prop firm, it's gone because you lost $2,000 out of your $100,000 account. So that's the thing you need to drive into your brain before you try passing an evaluation with a prop firm is you do not have $100,000. You have $2,000 to play with. That is your wiggle room. Okay. The next thing emotionally is less emotion, but it's more of you are holding yourself accountable and you know you are being bad if you do not have this. And that is, I must have a good idea of my strategy's win rate, average risk-reward ratio, and how many losses in a row have I ever taken before. If you don't know those 3 things or have a decently good idea of them, you have no business trading more than $1 or $10 per trade, okay? Let alone risking $100 or $1,000 per trade. You need to know, I'll say that again, your strategy's overall win rate. If you place 10 trades, you got to know, on average, I am going to win 5 or 6 or 7 of those 10 trades. You also need to know your average risk-reward ratio. Say if I risk $1, my trade system is going to have a profit of $2 or $3 or $4, whatever it is. And you need to know, in your overall experience over 20 trades, 50 trades, 100 trades, what was the worst situation that could happen? Have I lost 10 trades in a row? Have I lost just 5 trades in a row? You take those 3 numbers, and that is how you calculate your risk for the prop firm. So you've got $2,000 to risk or margin out of your $100,000 account. You say, okay, I can risk $2,000. I'm just looking at the market here. Looks like it's just waffling around for the weekend.
Yep.
You've got $2,000 to risk. So let's say you know I can afford to risk, or let's say you know your win rate is maybe about 50-50%. You know your risk reward ratio is about 1 to 2. And you know that the most losses you've ever had in a row was 5. Well, no matter how you split it, if you have a decent win rate and a decent risk reward ratio, if your max losses in a row, people underestimate that number, but it's really valuable. If you know that the most you've ever lost in a row is 5 trades, then you take that $2,000 and you divide it up into 10 pieces and say, that's how much per trade I am going to risk.
That's a really good idea.
And there you go. You are, in your brain, you are telling yourself, mathematically speaking, I should be profitable at the end of 10 trades. Absolutely. If I'm not profitable at the end of 10 trades, I got a problem. Okay, so that's moving on. Let me look at my notes and the time outline here of this.
Take as much time as you need.
That's where you're at. Yeah. That's the next thing is, if you know all of that, then you know if all I do is stick to my strategy rules, I should be profitable at the end of 10 trades or at the end of the week or the end of the month, whatever it is. Usually an evaluation period on a prop firm is it takes about a week. You're paying for a month's worth of access to that prop firm. So let's say out of a month, you paid $100 to have access to a prop account. And at the end of 1 month, they're going to rebill you that evaluation fee again. You don't want that. You want to get a payout by the end of 1 month or whatever. But you're giving yourself 14 or 10 days. There's like, what, 21 trading days in a month? Let's just round it off and say you're giving yourself 10 days to pass the evaluation and then 10 more days to turn a profit. So in 10 days, you're going to split up $2,000 worth of risk. That is, what, $200? You're risking $200 per trade. On average, you know, if I have a terrible situation, maybe I'll get wrecked, but I could probably just try again. However, most likely at the end of those 10 trades, I will be making money. I should hit my target. That's the other thing. If you have a $2,000 drawdown, you probably have a $2,500 or a $3,000 target. So that's also what you want to divide up based on your strategy's risk reward ratio. Say if my average risk is $200, my average win might be $400, and so you can actually dial it down even more and say, if I'm winning on average $400 and my target is to make $3,000, or let's do some easier math and say my average win is $300, my target is $3,000. How many winning trades do you need to get there? Just 10 winning trades. So you start by taking 10 trades. Maybe some of those are losers, but you're on your way. Worst case scenario, you get to the end of the month and you have to pay another evaluation fee. But the bottom line is by the end of a week or the end of 10 trades or the end of the month, you will know for sure I'm on the right path or not. The thing is, in all of this, it's all about sticking to your rules. Because if you don't stick to your rules and you are changing things ever so slightly and you're like, oh, well, okay, that trade didn't work. I'm going to just do a slightly different modification of my strategy rules for my next trade. If you're changing your rules a little bit every 2 trades, you have no business trading risking $200 or $1,000 per trade. Because if you break your rules all month long, or even a few times here and there spaced out throughout the week or the month, then It doesn't matter if you won or lost or are profitable or not, because you have no idea what the next month could hold. It could be a terrible month. And statistically speaking, it absolutely will be a terrible month and utterly ruin you sooner or later. So that's where you wind up with the overall emotional side of taking a gigantic sum of money, say $100,000, or you can get up to, if you have 20 accounts of $50,000, you're trading with $1 million. That sounds crazy. You have to dwindle it down by saying, okay, I don't actually have access to $50,000 or $100,000. I'm really only playing with margin worth $2,000. And therefore, that allows your emotional situation to be a little bit more relaxed. And then the only other thing that comes after that is doing your homework, doing the math to calculate those numbers of saying, hey, I've got $2,000 to risk. I'm going to risk $200 or $100 per trade. And if I've done my homework and I know my strategy's win rate, it should be profitable. So there's a lot of risk management tips, and that's what we're going to get to last. And let's see, are there any questions in the Discord yet?
It doesn't look like. Guys, feel free to.
Do you have anything? Yeah. Do you guys, Mickey, have anything to ask or clarify?
No, I mean, we're talking psychology, so it's kind of hard to maybe the anecdote of the battlefield. I'm not sure if you're going to go into that.
Yeah, I meant to add that to the motto, or the mottos to live by, that you should always be hearing these phrases in your head whenever you are trading, especially when you first look at the market. You want to be reminding yourself things like, emotion is not a trading strategy. And one of the other anecdotes is, think of all of what we've talked about is waiting for clarity, waiting for familiarity, waiting to see something you understand so that you're not caught off guard. And that has a very specific analogy of, it is as if you are in a war doing battle. Imagine you are caught off guard. You are in a defensive situation. You are running away, or you are caught off. If you're caught off guard, you are at a disadvantage. And that is never how you win consistently. If you are fighting your way uphill, you're fighting an uphill battle, it's muddy in the trenches and you're fighting an uphill battle, and the guy at the top is just easily lobbing grenades down at you. You can't count on that to win a whole entire war. No matter if you have one heroic tale of battle of like, yeah, we fought an uphill battle and we won, that's great.
But
that is not how a master, you lost lives in that case. That is not how a master strategist. That's why trading has what's called a strategy, which is also a military term. A strategy involves stacking the odds in your favor, and having the advantage, which is high ground, or in our case as traders, familiar ground, familiar territory of, I'm on my home plate advantage. I know, I've seen this setup before.
Let me allude just a little bit. I know it's your show, but the way I envision it is like it's a military battlefield with the military strategist. So between ancient and medieval combat. If you're a good strategist and you know what you're looking for in the ideal situation of a battlefield, you even wait for the time of day, you wait for the perfect weather to be in optimal conditions to increase the odds of success. So, in most of those battles, they were pretty much decided before the battles even begun. In that, the things that changed that were like an invention like bronze in the Bronze Age, which gave certain armies an edge. So, if you think about it in the
Oh yeah.
context of battle, you want to like, especially medieval or ancient battles, you want to have the high ground because it's less exhausting. You want to let the enemy come to you, and then you just want to essentially sit back and dwindle the enemy's numbers. The enemy in this context would be I would say the price action or market makers. You want to make sure that it's only going to work in your favor, and you don't have to try hard. You have to go into it with the strategy in mind. And if your strategy isn't working, you got to do a tactical retreat, and you got to know when to cut your losses. You got to know that this
Yep.
battlefield was not in my favor, so we need to get out of here.
And you do that because you know that on average, if you always seek the high ground, the advantage, if you always are looking for the advantage and you never engage the enemy unless you think you have an advantage, then on average, overall, you win the war.
Yep. All these small victories will add up to the winning the campaign. You don't need one
Yeah.
big. You don't need to win it in one big battle.
That's a huge thing with price levels when the market is absolutely crashing or when it's going to the moon. People get set on one price level or they get revengey about one particular asset that they're trading and they get hell-bent on this price level. It's got to reverse here.
Yeah,
It can't go any further. Oh my gosh, how it could. This is crazy. It crashed. Bitcoin crashed 5%. Well, it's had 10% crashes before, guys.
at that point,
You know,
at that point, you'd be the Mad King, throwing your kingdom away for vengeance.
yeah. Let's look at the monthly chart or the weekly chart on Bitcoin. Let's look at this classic example.
I could go into that more, but I'll leave the show up to you. Well, we could wrap. We could do that. We could play with that later in a deeper episode.
Yeah, we'll talk about that more in the private Discord. There's so many stories that we could talk about. But look at this. This is the classic 2021 Bitcoin pump. It got up to 64,000 and then it got up and just didn't touch 70K. But think of it on a weekly time frame. This candle right here. What's my percentage change? I can't see it on my chart. Oh, okay. This candle ranged 26%. Oh my God. Everybody right here, when that candle closed, I guarantee you everybody's going, oh my gosh, this candle dropped 24% open to close. There's no way it's gonna drop any further. That's absolutely bonkers. Well, guess what happened the entire next week? It just kept on slamming down.
That's called capitulation, and that's another military term.
Yeah. Oh yeah, surrender or capitulation. Like, how many people went? Let's look at the volume. Look at how many people tried to go long here and got stopped out. Okay. Ouch. So that's the bottom line is if you see something crazy and scary, you need to automatically wire your brain to say, hey, I was just surprised, caught off guard. I need to wait for clarity. And on a weekly chart, it might seem like it takes forever, but let's say you wait to see, oh, hey, this is a falling wedge. Maybe if this breaks, then I'll go and get in here.
And then I want to bring up
And then
another
there's
term.
your trade all the way back to the all-time
Yeah,
high.
that's
you
called
know?
that bullish move up is called a rally, another military term.
Oh yeah. There you go. Wow. Okay, so let's see. I'm going over the notes and seeing what do we need to still cover.
Yeah.
There's a lot of details. Let's talk about the technical stuff of using risk management to give you the emotional confidence to trade calmly and with calculated decisions so that you're not an emotionless robot, but you're making calm, calculated decisions. Risk management is how you get there. You start, like you said, I have $2,000 to waste on risk every month or every whatever. That means you've got $100 or $200 to risk on every single trade. You do the math. You use on crypto exchanges. It's really easy because you can just plug in say you want to risk $100 or say you want to risk $1,000 on a crypto exchange. All you do is you plug in your entry price and stop loss price based on the chart, and then you just set your leverage to 10x or 50x or whatever, and then you just bump your position size up or down until the risk is what you want it to be, $100 or $1,000 or whatever. The crypto exchanges are really nice at doing that because they list your risk in dollar amounts if you are plugging it in before you enter the trade. So you risk $100 per trade, and you know if my conditions are optimal, I should win X number of trades on average. Okay, so there's a lot of nitty-gritty details on how to, it depends on if you have a prop firm and you've got $100,000 to trade with, you don't need to grow that account. What you're doing is you're just generating an income every week or every month. And so that's a very different psychology mindset compared to if you're starting with $100 and you're trying to turn it into $1,000. If you don't want to go the prop firm route and you want to trade your own money, I don't recommend throwing $100,000 of your own money into a broker, especially as a beginner. That money will be gone. So start with $10 or $100 or $1,000 or whatever, put it in your broker, and you're going to grow your account instead. There's a very different psychology to that and the math behind it. And that is, if you are just targeting, say, hey, I want to generate $2,000, $3,000, $4,000 per month, just to start and prove to myself that I can do that consistently. And then after I do that for 6 months or 12 months, then I'll go crazy. And if I prove to myself that it works after 6 months, then I'll go nuts with my position size and become a millionaire. Guarantee that won't happen for most people because they do still have work to do on the actual strategy itself. That's a whole nother webinar for another day. Okay, so what are you looking for? You're looking for the conditions to be right. If you're only looking to generate $1,000 per week or $2,000 per week or $5,000 per month, all you're doing is sitting there waiting for optimal conditions, risking $100, risking $200, making the trade, and you're making your money. But it gets complicated if you are trying to grow your account. You are instead risking 1% or 5% or 10% of your balance, and you are hopefully winning 5, 10, 20%. And so a single trade, if you risk 10% of your account, a single trade could grow your entire account by 20%. Okay. But that gets really scary really quick, which is why usually the recommendation is don't risk more than 1% of your account. 2% is pretty degenerate in crypto because you're growing your account by 4 or 5% on a single trade. And all you have to do is account for your losses. You got to, like I said, you got to go back to knowing your max losses in a row and your overall win rate. Okay. But there's a few more technical details that help you find the patience to not do things like overtrade or risk too much on a single trade. So, for example, what if you're on a winning streak and your target to make that day or that week was $1,000? I want to make $1,000 this week. It's only Wednesday and you've made $1,500 or $2,000. What do you do on Thursday? I want you to get in the habit of taking Thursday, Friday off and just being like, cool, I'm done. My target was $1,000 profit this week. I made $1,500 profit. I am done. I'm taking the family out to dinner. I'm walking away. That should be your default, your habit. Okay. The next thing is, what if you really see the market and you're like, oh my gosh, I'm on fire right now. I really feel good about this. On occasion, you say, all right, I'm up $1,500. I only need $1,000 this week. I am going to take $500, kiss it goodbye, and potentially win another $1,500 or $20,000 or $3,000. Or no, let me do the math. $500 risk. Let's say you've got a crazy, 1 to 4 risk reward ratio. You might risk that $500. You might come out $2,000 up. Let's be sort of conservative about it. Suddenly you've got that $1,000 in the bag, and suddenly you've got another 2 on top of it. That's when you're like, okay, definitely going on vacation on Friday. And that's how you compound and grow your account if you need to. If you don't need to, then you should be saying, hey, that's a $500 bonus. I'm walking away almost every single time. If you do need to grow your account, then a little bit more often you say, okay, I made a little extra. I'm going to divide that up and say, all right, I've got an extra $500 this week. I'm going to pocket 250 of that and risk 250 of that instead of taking the rest of the week off. Either way, the important thing is to kiss that extra money goodbye before you enter a new trade. You need to have the emotional control, because that is one of the top things that happens is you're up way more than you need, and then you lose it and you want revenge. And then so suddenly you start cutting into your profit that you should have walked away from the week with. You never want to do that. You should always be bumping up, even if you're growing your account, you should always be bumping up your time to go home and call it quits for the day or the week number. Say, for example, your target for the day or the week was $1,000 profit, and you're up. The market just absolutely ripped or tanked, and for some crazy reason, you're up $3,000 instead of $1,000. You do not want to go playing around with $2,000, risking all of that on a trade. You pocket some of it, and you risk some of it. Okay. Whether you're growing your account or you're generating a steady income, it's either growth or you're paying yourself a bonus, like you just got a bonus at work. Like I said, this is a job. So the last tip on a technical level is this is how you build emotional strength is this. Make time, every single trade or every single day, definitely every single month, week or month, take time to review what you did right and what you did wrong. Make time for self-reflection. Most traders they're just one losing day away from totally destroying themselves. Or if you avoid that one biggest mistake, it could make a difference that is double or triple your usual long-term wealth. Okay? If you every month review your worst mistake and say, all right, that was dumb. I'm never going to do that again. It's not just a big loss, but an actual technical or emotional mistake. You say, I should not have done that. The signs were there. I knew better. I need to not do that again. You review this every week or every month, and you say, that was the worst thing I did this week, this month, and I'm never going to do it again. And then you know how you follow through with that? You tell people. You go on the Discord group and say, hey, this is going to sting to confess, but here's what I did. I blew my account, or I lost X dollars, but it was a very simple mistake. And when I'm trading, I'll be in Discord, and I want everyone to scream at me, get off your computer, if I am in this situation again. Okay? Accountability with a fellow trader is how you eliminate.
You need an accountability buddy.
Accountability buddy, yes. And this is not, I think one of the problems with trading with other people is it can be an echo chamber of, yeah, this long is it, get in, I'm in, Don't listen to that. If you go on Discord or whatever, and everybody's like, yep, I'm long, we're all long. Well, if everybody's long, look out below. What you want is to use that community or that friend, accountability buddy, say, hey, I'm not just going to share my best wins and brag about it and make it look like I am the best trader. The best tool that you can use the community for is accountability of saying, hey, you know what? This month, I did this one terrible thing and I need to never do it again. And even every single day, you can review your biggest mistake or your worst loss, even if you didn't make a mistake. Review your worst loss that day. Look very closely for any technical, like, oh man, I didn't see that. I can't avoid it next time if I just double check, blah, blah, blah. You put that thing on your checklist and you check it before you place a trade next time, every single time. Build the habit of doing that. You're going to have a whole list of notes, and then you narrow it down once you commit things to muscle memory. And that's how the best traders stay consistently profitable, because they have a mental or even a written checklist of don't do this, do this, look for the familiar signs, all of that. Okay? Make time for self-reflection. Because, like I said, imagine if you just eliminated your one worst day every single month. After 12 months, you are gone from your trading psychology, are the 10 or 12 most horrible mistakes you've ever made. I guarantee you that next year of trading is going to be bonkers profitable in a good way.
And that's the thing about it too. It's a trading journey. You're going through a journey here, and you're building and developing the skills and cutting off the bad habits. That's what people have to consider. There are people in the Discord currently that just, I don't know if no matter what we say to them, I don't think they get the point. But we are here for you. That's the whole point of being a part of this group. That if you need to talk with somebody, like we'll talk it out with you. We'll try to work it out with you and try to get you to drop the bad habits.
I'm a member of a lot of Discords. I never check any of them anymore because I'm just busy trading and living everyday life. But I notice in every Discord, there's always a few people who are just like, oh man, I blew my account again. Oh man, I blew my account again. And everybody else is like, dude, what were you thinking? If you just listen to us and don't do that one thing, you would be wealthy by now.
Yeah.
And oppositely, I will say this. The Discords where I notice that there's a dang handful of profitable traders in there, they're doing exactly that. They are every single day, they go in and they start by posting their game plan and sharing like, hey, here's what I think for the day. I think this could happen. Here's my outlook. If price gets to this level, I will look for a trade. And then afterwards, at the end of the day, they post again and say, yep, it happened. I made money. Or they say, no, it didn't happen. I just didn't trade. Or they say, I made a mistake. Here's what I'm going to not do next time. Those Discords or communities or whatever they are, where people regularly do those things, those are the ones where you're like, wow, there's a lot of people in here who seem to be actually making money. But that's what you said about bad habits. That's the conclusion of all of this. Is that, yeah, you need a strategy. That's the one thing we didn't really talk about right now. Let's go back down to the 1 minute chart and
We
see
don't have to
what's
get
going
into
on.
like any specific strategies, because there's a
Yeah, that's the point.
yeah.
You don't need. I'm not going to tell you that there's one strategy that you must use and it is the only way to go. If anybody ever tells you that, they don't know what they're talking about.
They're
Okay,
bullshit. Yeah.
And I believe that ICT works, for example, but I hate most ICT traders because they think they are God, and that's all they ever go on about is, see, I was right. If you only perceive the way I perceive, then you will magically blah blah blah. And a lot of traders out there, they talk in that way. But I'm not going to tell you that there's only one strategy that works. I know for a fact that there are multiple, innumerable edges on the market. But the problem is, you won't even know if you have an edge if you don't have emotional self-discipline. Okay? I could teach you the most lucrative winning strategy ever right now, but if you have no self-discipline, you will screw it up, or you won't believe me and you'll throw that strategy away after 2 losses. You know, so it's a catch-22. Without an edge, you have nothing. In fact, what you do have is a gambling addiction. That's a bad habit.
Yeah.
And that's really serious because you can ruin your life.
And the thing about having a gambling addiction is most people don't know that they have one, and they always blame other people for their failures. Yeah.
That's the number one thing. Like I've never been to Vegas and gambled, and I've never, gone to the track. I hear people talking about betting on horses or this or that. It's kind of an old school thing, but it all sounds the same it's all emotional. It's all subjective, emotional stuff. But if you don't have an edge on the market, that's what you're doing. It's all emotional. It's all subjective. And you are gambling. And that will eventually ruin your life, break up your family, financial bankruptcy if you can't control an addiction. Well, that's rule number 1 is you have to have emotional clarity in order to test your strategy consistently enough to know that you have an edge or not. And I don't even care what strategy you test, just start getting in the habit of going on YouTube, pick a random strategy that is relatively simple to learn. You can, if you don't like how complex ICT is, you can just learn the silver bullet, which is keeping it super simple. Between 10 a.m. and 11 a.m. Eastern time, you trade the NASDAQ, you look for the first 5-minute fair value gap that shows up, and if it's bullish and a low was recently taken out, you go long. Just create a Google spreadsheet and log 10 of those trades. Let's say, did it win or lose? What were the criteria of what happened? Get 10 trades and be like, huh, this strategy is definitely not profitable. You know, you say, all right, I didn't just waste my time. I gained information, and now I know that I can just filter out all of that noise from other traders being like, oh yeah, I just learned this, I just learned that. You know, it's great. No, you test it mechanically, systematically,
Alex,
and you throw it away when it doesn't work.
yeah, Alex left already, but they said,
oh yeah, we'll record our response for that.
I've done that plenty of times, been up 5x in my normal daily goal, and then given it all back. You think you're hot, can't lose, and then you give it all back. I have a whiteboard in my office, and I have a list of rules and guidelines for my trades. I'll add new ones and take off ones that I have down. My trades have improved tenfold since then. It's good to consistently see rules and read them every day. That's actually a really good point. I wish I had mentioned this earlier, but when you have
we should add.
Yeah, when you have a written rule set written in front of you and you reference it before your day starts, I think that's a really good template to have for success.
Yeah.
Post a note.
In fact, I have a friend who right now, I've been trading with this guy for 6 or 12 months, okay? And this guy was quite degenerate for most of that time. And he would be like, oh man, I blew my account. I have another friend who was like, he had $2,000 that he just randomly came into, and he's like, I'm going to trade it. And I was like, dude, why put $2,000 of your own money into this account when you can't even pass a prop firm challenge? And he's like, no, man, I got it. I don't want to. Prop firms have too many rules. I'm like, well, the rules are there to help you. So this guy puts $2,000 in his account. Literally 24 hours later, he messages me again, and he'd be like, it's all gone. I just blew the entire amount. And I'm like,
well, it's because
I can't even fathom that, because I live in Southern California and my rent, you know, like,
yeah.
How do you blow $2,000 in a day without? Here's the thing: you could get to the point where a $2,000 loss is normal, but if you're a beginner trader who has not proven consistent profitability yet, you have no business throwing $2,000 at trades in 24 hours.
Well, that's also just rent.
That's the round trip. Yeah.
Let's say you get kicked out,
and
then you have to make first, last, and deposit.
Yeah.
Like that's like,
so that goes back to
where I'm at, where you have to just front out $12K.
Yeah. Jeez. So that goes like what Alex was saying, and that's one of the things that we were talking about earlier, Mickey, was round tripping it. You are emotionally, and I heard this in 2 different webinars randomly on the internet lately, because that's all. I don't listen to YouTubers these days. I just listen to like actual educational content, audio books and that kind of stuff. Mm-hmm. That's all I do these days for my continued education. 2 different times I heard the same thing, and that is, you are emotionally, like genetically, your brain is wired. Panic and fear and fight or flight, you know, you are genetically wired to avoid pain. And oppositely, you are genetically wired to keep going if there is pleasure or euphoria. We could say some inappropriate things about guys that don't know how to
Yeah,
Stop. Yeah.
David Carradine.
Um,
Some
that's a genetic wiring. When you feel pain, and I never thought of this before, but it translates to trading so perfectly. When you are in a loss, your brain is screaming at you, bail, go, get out, quit, close the trade. When you are in a win, your brain is like, oh yeah, woohoo, this is so amazing. And that is why so many people round trip their trades. And the one guy was saying he had $300,000 in the 2021 crypto bull market. He was up over $250,000 and gave back 100% of it.
oh,
And I was just like, yep, because that's your genetic wiring. That's your the saber-toothed tiger is coming at you. You're done.
well,
You panic.
here's another strategy too. There's a
So that's what I was. The conclusion of that is take profits. That we talk about this in the Discord all the time. Every time you enter a trade, you should know when I can take my first profit to cover my risk. You're cutting your position in half, so your risk is now cut in half, more or less. You should always know, that should be part of your strategy. I'm covering my risk as soon as I can and letting the runner run. Whatever strategy you use, whatever that is, you should know, manage your risk. And then also, like I was saying before, if you have a prop firm or just larger accounts in general, pay yourself regularly.
yes.
If you're in a prop firm and you're up $5,000, you have no business risking $2,000 on the next trade until you have paid yourself as much as you possibly can, while still having that cushion of what's called the daily or the max trailing drawdown or max drawdown of that prop firm. Pay yourself regularly.
There's also
and remind yourself that you are psychologically, genetically wired to not want to do that.
and of course, this is not financial advice, but what I do is I diversify. So I've got my trading accounts, and then I'm waiting for Biddy to go down. Then I'm gonna spot hold some Biddy, but I also have in hyper liquid, I have Vault. I'm earning 22% on money that I have in the hyper liquid Vault. So
that's a great emotional trick to stop you from trading on terrible days. And that's a free vacation, paid vacation. Say your account gets up to $100,000 or $200,000 if you're a big time trader, 20% per year to not trade. Okay. You're obviously going to make more than that by trading, but that should be like every single Friday or every single day when you look at the market and you're like, what the heck is this disgusting mess? Walk away, because you know that you have X number of dollars making 20% per year or whatever it is, that the staking, there's so many different opportunities that you can say, all right, I've staked this, or I've got the vault on Hyperliquid. There's a bunch of different opportunities. You can get like 5% per year on just staking or having USDC or USDT on Coinbase.
And it's compounding.
Use that as psychological, hey, you know what? It's cool if I don't trade today. That psychology right there is gold.
Yeah. And you got to remember the power of compound interest. If you make 22% 1 year on 100K, I'm just throwing this arbitrary number out. That's $22,000 on 100K. And that goes into the next year's stack. So if you were to make another 22% on that 122,000, it's only going to exponentially grow. Especially if you keep squirreling away your wins, into safety places, safety nets, until a point where you can buy a property.
Yeah. Oh, that was another psychological trick that I was told by one of my mentors, was the reverse psychology of when it is time to take profits and dial it back and not be so cocky. Number one, when that random cousin or brother or annoying friend texts you out of the blue and says, hey, how about that Bitcoin? I heard, bam, sell 20% of your bag and just put it in USDC and make,
Yeah.
Whatever.
When the wisdom of the crowd is going in the wrong direction.
When you have so much money that you are shopping for real estate or thinking of moving or buying a car, bam, sell another 20% of your bag and just take a week off and don't look at the chart. When you get, when you start bragging to your friends about your biggest win ever, you should already be 50+% out of the market by the time you are bragging, saying, look at how much I made.
Yeah, that way
Okay.
your pride doesn't hit you in the fall.
Yeah.
Yeah, and some of the biggest screw ups that I've ever had in my life, it was because I was being cocky, I was being arrogant, and then or I wasn't paying attention, and then bam, life hits you.
Yeah. So yeah, I'm looking over my notes, and I think that's basically all I have.
All right.
The only last thing I want to say is we are doing all of this in order to rewire our brains so that you do not want to feel a dopamine hit when you don't want to feel this emotional sting of a loss, but also you don't want to feel a dopamine hit from a win. Money, losing or winning money would not involve a dopamine hit. You know what should give you a dopamine hit? Following your rules and executing like a machine, like a war machine. You should feel good and proud of yourself and happy, regardless of win or lose, if you executed a flawless trading day strategy. That's what you need to master the art of, is executing. Because if you're breaking your rules and you're winning, that should feel bad. You should be beating yourself up, even if you won big, and be like, man, you know what? I broke my rules to win that trade. That is unrepeatable. I cannot do that again, because I could lose big, and I will eventually lose big if I do. And that's what it all comes down to, is how your brain is wired. Some people's emotional capacity, you should not be trading the 1 minute chart. Some people's emotional style, if they're ADHD or whatever, maybe you are great at trading the 1 minute chart. Everybody's different, and it's all about the journey. Everybody's journey is different. What everybody has to do is do their homework. You will rapidly improve your ability to sense whether or not a strategy works or not. It has an edge. If you just work on perfecting the art of testing something by following it, I don't want to say like a robot, but following your rules. The rules can be a little subjective, but you've got to follow your rules. Practice that on just like 5 or 10 trash strategies off of YouTube, and you will have an incredibly higher sense of when you do come across that strategy that does work. It will be a no-brainer. It will be crystal clear that you say, wow, you know what? This actually works.
All right, well, let's
And
go.
this is, I mean,
Go ahead.
yeah.
I mean, we can go.
This is everything we've said applies to everyday life as well. Like self-control or self-discipline and holding yourself accountable. That's always the difference between. It's not the difference between a trust fund kid and a poor person, but it's the difference between two sane people and who is going to succeed in life or not. Is doing that homework of holding yourself accountable.
You're
Support structure.
sorry, buddy. Your robot is pretty bad.
Okay, we're getting creeping down
Yeah.
down the wire.
It looks like Mark Zuckerberg is taking over your body and your voice. Well, let's go ahead and call it there. Sorry, I don't know what's happening there, but let's call it there. Um, everybody, if you like what you saw, if you want more of Astronaut Toad, or if you want to be a part of the community and have access to some of our indicators, again, www.cartoonmoneyprinters.com. Click the Start Now button, and we have 90 days of free access. That's pretty sure that's a quarter of a year. Yeah, you get a quarter of a year for free. So if you like what you see, then stick around. You know, we could definitely use the support. Um, you know, these indicators are pretty powerful. The education here, I think, is solid. We just started, but I think we have a lot of amazing growth ahead of us. So
Yeah,
expect
inside the Discord we have Edge. We discuss Edge and how to specifically trade multiple different strategies. We have tutorial videos, and like I said, Edge is everything. Without Edge, emotional psychology doesn't matter. But that's a whole different ball game, and we got tons of educational content along those lines to help you find your edge.
All right, guys. Well, yeah, thanks for joining us, and we'll catch you all